Hi everyone, today we're going to talk about two things. We're going to talk about one, what's a financial plan? The second thing, we're going to talk about the process that you go through to create a financial plan. Okay, so what's a financial plan? A financial plan is a written report, and we create this report by looking at your goals, your needs, and your priorities. We also look at all the different planning areas, which we'll talk about shortly. We see how they're all interconnected. And essentially what we do is we guide you in managing all your finances effectively to help you achieve your desired goals, right? So, what are the different areas of a financial plan? Well, there are about seven of them. There is financial management, insurance and risk management, investment planning, retirement planning, tax planning, estate planning, and what I call the legal aspects, which is an underlying theme for most of these, right? Okay, so let's start off with financial management. Financial management is where we look at your current status. We look at your net worth, we look at your cash flow, your budget, your income, your cost of living, your savings. A lot of people are more familiar with this when they think about financial planning because they often think about budgets and, if there's surplus and shortfall and cash flow. So I think that one's a given, and most people are familiar with that. So that's one area we look at. The second area we look at is insurance and risk management. So what's insurance and risk management? Well, what we do here is we look at your financial vulnerabilities, and essentially we try to mitigate that. So we evaluate your risk, your exposure, your assets. We look at what coverage you currently have. What would happen if you pass away? What would happen if you have any health issues, property damage? If you have a business or corporation, we look at business risk. And essentially we look at all of these risks and exposures that you have, and we look for ways to mitigate that. It's one of the first things we do once we're finished with financial management. Next area that we look at also is investment planning. Now, a lot of people equate a financial plan with investment planning. So the two things I find that people consider when you think about financial planning is, okay, the cash flow, the budget aspect of it, which is financial management. The next thing is, the next area is investment planning. People, okay, stocks, investment, mutual funds, ETFs, whatever the case is. But people typically equate either the budgeting aspect of it or the investment planning. So what's investment planning? We're just looking at your assets, and essentially we look at your objectives. Remember the objectives that you have, the values, the goals, because that's the foundation of everything, by the way. Before we even get into any of this, you have to find out what your goals are, what's important to you, what you want to achieve. So for investment planning, we look at your assets, and then we consider your experience. That's part of the thing we look at. We look at your time horizon, your risk tolerance, income needs, and diverse holdings, including cash, stocks, real estate. And quite frankly, for different individuals, this will be different, right? So for example, if you're a real estate investor, you might be heavy in real estate. So that might be where a lot of your assets are. If you're a business owner, for many business owners, their assets, a huge part of their asset is their business, may make up as much as 80% of their net worth. So overall investment plan, we just look at your assets, and then we look at how it's invested and making sure that, from a time horizon, risk tolerance, your income needs and everything, if we're on track or if there is some type of a shortfall. The next area we also look at is retirement planning. So with retirement planning, we look at your goals, we look at your values, we see what's important, and then we look at your existing assets. We look at your planned savings, how much income you have now, how much income you'll be receiving in retirement. And essentially, we're looking to see if you have enough for lifelong income sufficiency. And essentially, what we're looking at is, okay, based on how much you're going to be spending once you retire, we look at your life expectancy, and we monitor to make sure that, whatever your goals are, that your assets can meet the requirements of those goals, right? And if there's a shortfall, then we need to make some changes. If we have some left over, or if we have enough of an estate based on the plan, then it's where we look at estate planning. But for retirement planning, we're often looking at just what are your assets, how much do you need, and if you have enough to last you until you've achieved life expectancy. This is one of the huge pillars. I mean, they're all important, but it's one of the huge pillars of retirement planning, because many people have assets, but they are not sure if it's, how much do they need in retirement, how much assets they need, what rate of return they need to have during retirement. So this fulfills that gap. If you're asking any of those questions and you can't answer it, this is what fulfills that gap. And it's a huge thing that you want to know, because what it does is essentially gives you direction, huge direction in where you want to go, how much you should be saving, and what your portfolio should be doing. Right? So it's big in terms of getting a sense of where you want to go for retirement. Next, we have tax planning, and this, I believe, is probably the least focused area when I have sat with individuals. And what's tax planning? It really looks at your situation. We analyze and we strategize your present and future tax obligations, and then based on your situation, we see if there are ways that we could minimize your taxation on a personal and business level. And then, and of course, if we are able to minimize your taxation, what we're able to do is improve your financial position. And improving your financial position means you're closer to achieving your goals. And essentially, taxes are a huge expense. People underestimate the tax planning aspect of it, but it really is very important. And it's probably the most underutilized aspect of financial planning, at least based on the prospects and clients that I've seen in the past. Then we have estate planning. Estate planning looks at your end of life wishes. It projects your net worth, and it's based on what you're doing now, what you can do in retirement. We identify opportunities and constraints for your estate planning goals, and we put in place strategies that ensure that the expenses are paid, expenses including taxes, and we make sure that the assets that you want have transferred. Make sure we have those strategies in place. And a lot of times we're doing this with a lawyer, of course, because a financial planner is doing the planning. The lawyer is implementing a lot of the documents that will go along with the plan. And essentially we're looking at, all your end of life wishes and making sure all those objectives are fulfilled. And then there's another part of it is the legal aspects. And again, it applies not just to one area, but all the areas, because regardless of the different planning, the different areas that we're looking at, and the plan that we're trying to implement, the plan that we're implementing, it depends on your situation. There's always a legal aspect to it, whether it be spousal support, whether it be child support, whether it be third-party obligations. If you're a business owner, their partner agreements, their powers of attorneys, their shareholders agreement. There are all these different things that play a role. So we could be planning, but if from a legal standpoint, it contradicts the plan, then that doesn't work. So in addition to laying out the plans, what you want to know is you want to know is the legal situation and how that will affect the plan, so that your intentions are actually fulfilled. So the legal aspect of it is a running theme through all of financial planning, whether it's having investments and you want to consider who to leave them to, whether you have a corporation and you want to put a buy-sell in place and things like that, and who would receive your ownership, who would receive the ownership of your shares if you pass away. These are all things you have to consider, the legal aspect of it. And then, quite frankly, tax planning too. Tax planning is governed by tax law, right? So there are legal implications to all the decisions that you make, and so that's super important. And it's a theme that runs through financial planning. Now that we've gone over, all the different areas, one thing I must say is when you implement a plan, it's not a as I would say, one and done situation. What you're doing is this is an organic document that changes constantly based on your situation. Whether you receive inheritance, whether you get an illness, whether you get an increase in pay, whether you sell your business. There's all these different things that come into play and changes the plan. Think of it like a GPS. If you're using Google Maps or Waze or whatever GPS you use these days, or whatever app you're using, you may put in a direction, you put in an address, and on your way there, different things, that you may get different options, and different things come about and changes the path. You may be able to take a faster path, maybe take a shorter path. You maybe have to get some delay because an accident happens or construction happens. And it's the same thing with life. Things happen, and with all these things happening, it affects the plan itself. And so we go in and we make changes based on those situations, right? Now, in terms of the process of creating a plan, it's a six-step process. The first one is usually a discovery call, and that's where you speak with the financial planner. And this is not, we're not talking product, we're not, you may have talk about net worth, but you're definitely not getting detail at this point. The most important thing is find out what's important to you and the goals. And this is going to be the foundation, because later on, if we need to make decisions, this is what we're going to rely on. We're going to rely on what's most important to you, and we're going to look back at that. And the outcome of this call is clarity. You're going to have clarity on exactly, or at least if not exactly, clear sense of where you want to go financially. What do you want to do? What does retirement look like? What does estate planning look like? What does even sometimes the more short term, buying a home or buying a business, or transitioning the business. These are all different things. But the one thing you want to walk away with here is values. It's usually a discovery call, and depending on the individual situation, it could last anywhere from 20 to 45 minutes, but usually about half an hour is probably, it's probably about half an hour is usually the time that you spend on this. And that's usually that first discovery call where the financial planner gets a sense of what's important to you, what are your goals, get a sense of who you are, and you also get a chance to speak with this financial planner and find out, okay, based on who this person is, the qualifications and everything else, if I want to work with them, right? So it's that intro call where you're trying to figure out if it makes sense to move forward. The next one is, the next step in the process is data collection. And with data collection, this is where you provide all the information. The more information you provide, it's going to be better for the financial planner, because what it does is it gives us a sense of really your position. And that's the important thing, because we already know where you want to go. Now we need to find out where you are, because in order to lay out the path and the guide and the different options, we have to figure out where you are. Think of it like a GPS. You already know where you want to go, but then the GPS does this thing and it uses satellite and figures out where you are before it gives you that path. All right. So the big outcome from the data collection is choice. Why is choice? Because now we have everything in place. We start to really get a sense of, okay, how many assets do you have? How many assets do you have? What are your goals? And all of this you start to get a sense of what's possible, what's not possible, at least based on what you have now. It doesn't mean that it may not be possible in the future, but we start to get a sense of what's possible, right? So if you don't have a lot of assets and you have a huge desire to have a retirement where you're traveling and doing a lot of things and giving away a lot of money and charity and things of that nature, then you need to create plans, put plans in place to make sure that happens. Or maybe you have a lot of assets, but it's tied up. Maybe you have a lot of wealth, but it's tied up in different assets, right? But we start to get a sense of what's possible, what's not possible. And because we have this awareness, it creates choice, right? We start to figure out, okay, maybe we need to work on increasing your income. Maybe we need to work on, if you're real estate again, possibly look at, okay, acquire more apartments, if that's something you do. Or if you have a business, well, we need to probably increase the valuation of the business if you plan on selling the business. But we're getting a sense of what's possible, what's not possible. But a big thing here is awareness, and that leads to choice. Now, once we have put everything in place, when I work with clients, and we start to put the plan together, this is what we're going to do here. We're creating a strategic plan. I do this with the clients. So now we have everything, all information there, and we know what's possible. We start to look at, okay, what if we, and let's just give some examples. Take CPP early. This is how it affects the plan. If we delay CPP, this is how it affects the plan. If we, you have all of these different apartment buildings, or you have all these different units. What if we sell a couple of these units? This is called supplement your retirement, help you to get more cash flow, or whatever the circumstances are. We're just looking at what you have, and then we're just, looking at how each choice affects your plan, right? And then based on this, we're also looking at opportunity, right? What opportunities are available to us, or what opportunities we can create, right? And the big thing we're going to leave with after this step is focus. Focus meaning we're going to, for now, make some decisions in a direction that get a sense of direction of where we want to go. Where we're going to move this, or what steps we're going to take, or which we'll speak about this further, but which professional we need to bring in. The direction is going to start here. So step 3 is where we actually create a strategic plan, and outcome here is focus, right? Now, once we get a sense of direction and where we're going to go, we start to decide, right? Because indecision is a decision to fail. Because if you don't start to decide some steps we're going to take in place, and usually this is where step 4 for me is where I consider you Inc. And this is where we start to build a team. Because with a financial plan in place, now we need a team. It's not just a financial planner. We may need to draft a will, a lawyer, so we bring a lawyer in. Based on the situation, we may need to, get a new accountant. If you need to invest, we may need to have a money manager brought in. If it's insurance, then insurance person is brought in. If your rates are probably high and we think we could do better, maybe we bring a lender in. It just depends on your situation. If you are a business owner, you're looking to sell your business in a little while, then we might want to work with a business valuator now and determine the value of your business. That way we know, what's the shortfall and how much we need to make up for your wealth gap. And that's just the difference between how much assets you have now personally, how much you have for business, right? So we're just looking for which team members we need to step in and to help us fulfill your goals and your dreams and your wishes, right, from a financial standpoint. And then once we have everything in place, we have the plan in place, we have the direction in place, we have the professionals in place, now we just start to implement, right? And outcome here is obviously results. Because now we're implementing, we're going to, create a bit of a schedule. I call it a future scheduling of where all things should be done. And we're looking for results. So is the will drafted? Have we invested? Have we put the life insurance in place? Have we looked at the lender and have you worked the lender to make sure you get a better rate if that's something that's on the table? If there's a cash flow issue, we look at if the different actions have been taken to deal with the shortfall, or if there's not a shortfall but we think we could do better and spend less, are we taking those actions, right? So the implementation aspect of it is where the financial planner works with a client to make sure that we're getting results and we're moving towards a goal. Because again, it's a guide, and in order to execute on a guide, things need to happen, conversations need to happen, steps need to happen, and we need to start seeing the results. And where we need to, we hold people accountable, right? So if we need to have something done by a particular day, reach out to individuals to get that done. And then the step 6 is examine, looking at the whole situation. We review everything, we hold everyone accountable. It's not a one and done. It's a continuous thing, and so there's follow up that has to happen, and that's exactly what happened. We follow up, depending on the individual, at a minimum once a year, sometimes twice a year, with clients. A lot of clients, I'm typically, meet with them at least 3 times a year, and sometimes with the first plan. That first plan, usually you're meeting more frequently. Once things are in place, we just constantly review and check up and make changes. And of course, as the client's circumstances change, then we also make adjustments. And by the way, this is what I call the CADI system. It's my system in terms of a process. Again, the C is for clarity. The A, next step, is for awareness. Then we get some direction. Then we make some decisions. Then we implement. Then we examine, right? Hopefully this was helpful. Hopefully you got through all of this, and if you're here, well, that's great. You find all this informative. So yes, this is hopefully you'll find this informative in terms of what's a financial plan. Not only what's a financial plan, but what are the steps that you put in place to execute on that plan. And in a future video, what I will do is I will actually go through a financial plan. Obviously not a real plan with a client, because then that's just confidential information. But I'll use I'll use I'll create a fake plan just so you at least see what that looks like, and see the benefit of it. If you found this helpful, like and subscribe. See you in the next video. Take care.